Hi, I'm Josh. I'm one of your Majestic Residence's virtual support team members. In this session of Let's Talk, we're going to discuss using life insurance to pay for care. So, let's talk. As the cost of senior care continues to rise, many families are seeking creative ways to finance residential assisted living, or other senior care expenses. One lesser-known option is the use of an existing life insurance policy through a process known as a life settlement to help pay for care. A life settlement involves selling an existing life insurance policy to a third-party investor for a lump sum cash payment. This amount is typically more than the policy's cash surrender value, but less than its death benefit. Once sold, the buyer becomes the policy's beneficiary, continues paying the premiums, and receives the death benefit when the insured person passes away. This financial tool can be particularly helpful when a senior no longer needs the life insurance coverage, but needs liquidity to fund long-term care expenses. The funds received through a life settlement can be used at the policyholder's discretion, including to pay for residential assisted living or assisted living community costs. There are some key benefits of life settlements for senior care. First, it unlocks immediate cash. Seniors can use the funds to cover monthly care costs, make a move to an assisted living setting, or supplement other care-related expenses. Secondly, there are no restrictions on use. Unlike Medicaid or long-term care insurance, life settlement proceeds come with no usage restrictions, offering greater financial flexibility. Thirdly, it is an alternative to letting policies lapse. Many life insurance policies are simply allowed to lapse or are surrendered for minimal cash value. A life settlement can offer significantly more return. There are some important considerations to be aware of. Not all policies qualify. Term, whole, and universal life policies may be eligible, but most life settlement providers prefer policies with a face value of $100,000 or more and owned by individuals aged 65 and older. There are some tax implications that may apply. Proceeds from a life settlement may be subject to taxes. It's essential to consult with a tax advisor before moving forward. A life settlement may have impact on your loved one's Medicaid eligibility. The funds received could affect eligibility for means-tested programs like Medicaid, so careful planning is required. Using a life insurance policy as a funding source can provide families with critical financial relief when transitioning a loved one into an assisted living environment. A life settlement is a powerful option worth exploring when traditional resources fall short.